So what would be the best Singapore tech stock if we were to see a recovery in the tech sector in 2023? Hey guys, Joey here, top 10 MyZero trader in Phillips Securities. And over the past few days, we have seen weakness in the tech sector again in the US because of now possible fears over recession, right? So the market kind of like sold off by more than 1,000 points, 2 or 3% for the US, the Dow Jones, the Nasdaq, and Singapore as well. We are seeing weakness in the tech sector. All right, so what is the outlook? I mean, right now, I would say that we have pretty much 4 popular Singapore tech stocks, which are right over here. You can see here AEM, Frencken, UMS and IFAST that just came into the picture recently. Right, so these are pretty much the 4 popular tech stocks in the Singapore market that I get asked quite often about, but I like 2 of them quite okay, I would say, for now, and a potential recovery in 2023 could see more upside. Okay, so which are the 2? All right, make sure you watch this video all the way to the end. All right, where I'll share with you these 4 stocks: AEM, Frencken, UMS, IFAST, and what are some of the key levels that you want to take note of. Let's go. So the Fed has kind of like hiked rates by 0.5% last Wednesday, right, which is pretty much the 7th rate hike this year, all right, and kind of like put the rates to be about 4.25% currently. So they kind of like hinted that they'll still be aggressive going forward into 2023, all right, and the peak will be changed or shifted higher, right, from below 5% to more than 5%. That's where the market got a little bit spooked, all right, started to sell off, because whenever there are talks about, you know, hiking more or perhaps changing the peak, that's where people start to sell off, right? So yeah, I mean, the tech sector got hit as well over the past 1 week, all right? But the Singapore tech sector has been doing quite well. I would say they've been holding really well. Of course, some stocks are still seeing weakness, some are still in a downtrend, some are looking at a pretty decent reversal. So let's take a look at the first one, which would be AEM. Let's go ahead to take a look at AEM right now before we move on to the rest. All right, so this is AEM right here, trading about $3.64. So I've covered this stock, I would say, in a video about a month back on the Singapore tech sector, and this was one of those, I would say, blue chip tech stock in the Singapore market, and it has kind of like broken a very key level that I talk about. Let me just draw it for you. I've said this level is the $3.90, right? It was the level that we've been holding above, I would say, since like 2021, I would say more than 1.5 years, and we kind of like broke this level somewhere around October. Again, when we broke the 390, it's sort of all the way to like $3, or a psychological support level back to where we were in 2020, all right, when COVID hit, and we kind of like saw a pretty decent rebound back over here from $3 all the way to about $3.90. So I would say that in terms of the short term, yeah, we did see quite a good rebound from $3, which is good, but the key here is this same level that I talk about, and that would be the $3.90. In fact, you know, we have kind of like seen a little bit of profit taking right over here 2-3 weeks back. We kind of hit it there, and there were some sellers that came out to push prices back down below the $3.90 level. And also look at this right here. This is where the longer term moving averages line are as well. So the red line will be what we call the 100 days moving average. All right, the blue line is a 200 days moving average, like a 6 months to a year period. So both of these lines are pointing down, and you can see that prices are still below these 2 lines. So if you ask me, I would say that the mid to long term trend, unfortunately, is still a little bit down for now. All right, not really like down, but it's still a little bit down for now, and we still want to get above a key level, and that level will be the same thing, right? The $3.90, which is what we call that support. All right, since 2021, last year, this support would now be the resistance. You can see right over here as well about, right? So it's now the resistance level. We tested it, it couldn't get above, and we came back down. So I think that is the range right now. I would say that a little bit of support coming in. Let me just draw it for you. A little bit of support coming in over the past 2-3 weeks, maybe around that 350, 360 level. I think that is pretty much a near-term support. If we can hold above that, it's still okay. But the fact that we've rebounded from $3 all the way up to $3.90, let me just go to shift this up a little bit. I would say that the range has been tightened to a little of a smaller range from $3.50, $3.60 to about $3.90. And in fact, I think $3.90, if you want to give a little bit of leeway, since it's very near to $4, we can just shift this up a little bit. So yeah, resistance wise, yeah, $3.90 to $4, I think that is pretty much the range right now. Also where the longer term moving average line is. So in order to see like more upside for AEM, I think if that happens, if we can break this $4 level, then that'll be a good thing in terms of the short-term upside happening. We might see a push all the way back up to that previous high at about $4.60, $4.50. That could be the upside. But right now, I think $4 is a very, very important level to take note of. We definitely want to get above that level to see more short-term upside happening. If that happens, then the trend might slowly turn up as well in the mid to long term. Alright, so this AEM, one of those stocks that you can take note of as well. Alright, and I mean, just take note of the support, as I say, 350, 360 support. If that breaks down, then not so good. I mean, I would say that the green line, 20 days moving average, is kind of like sloping up a little bit, but prices have kind of like gone back down. Yeah, but if we were to break 350 and 360, I think this line might start to go down. Short-term wise, not so good. We might start to hit lower towards maybe $3 to $3.20 again. Okay, next stock would be Frencken, right here trading about 0.955. So I would say that among all the tech stocks in the Singapore market, Frencken seems to be the one that is the weakest. I would say a little bit more of a firmer downtrend. You can see that the, I would say, longer term moving averages, the red and blue line, they're both sloping down quite aggressively, I would say, since the beginning of 2022. Alright, we kind of saw this crossover here. Broke certain support like the $2.10, even the 180 gave way, became resistance, and kind of like sold lower and lower, right? So I covered this stock, somewhere around October as well. You can see that we were pretty much consolidating from like 80 cents to 90 cents, and we kind of like broke this 90 cents level support. You can see this green line started to turn up as well in terms of the short term. So even though the mid to long term is down, but in the short term we can also see some rebound in the short term. You might hit to a certain level and then selling can actually come back again. So that's what we have saw, right? So we have broke these 90 cents, and in fact there were some upside targets that were drawn from like 90 cents to $1 all the way to around 120. That was actually our target in terms of the short term, whereby selling can come back again. So why 120? Because that was pretty much the resistance since July, August. We've touched and came back down. So that was kind of like our upside targets. We joined it, all right, we hit it there, and yeah, we have seen selling coming back again, all right, also where the longer term moving average line is, and we have sold back down from 120 all the way back down to 0.95. So I would say that for Frencken is still a little bit weak. I think in order for the trend to really turn up in 2023, all right, just next month, very quickly, all right, going to 2023, I would say that we want to break this key level, the 120 that I talked about. So it's like this 120 will be quite firm. I mean, the fact that we went there and we came back down, there was the resistance in August, September. So it kind of like tested many times, also where the longer term 200 days line is. I think that is a key level in order for a trend reversal to happen really in 2023. All right, if not, if you're still below it, unfortunately it can still be a bit weaker. In the short term, we might just rebound a bit from there, and then sellers can come back again. All right, so this is Frencken, a little bit weaker for now. All right, more of a downtrend. We kind of like rebound towards the 110, 120. I think that's where selling can actually come back again. All right, so we've covered two Singapore tech stocks, and that would be AEM and also Frencken. So let's move on to UMS and IFAST as well, which are some of the most popular Singapore tech stocks. So let's go on to UMS right here. So UMS trading about $1.26. I would say that this stock has staged quite a good rebound. All right, somewhere around October, November, we kind of like sold off, went below the $1, but when we broke above this psychological level, look at this right here, pretty decent, good bullish candle, and we rebounded from $1 all the way to 130. So there were some upside targets that were drawn as well previously, all right, all the way to like 120, but it seems like we've breached that, and we have found a little bit of resistance at about $1.30. So let me just go to analyze it for you. I would say that right now, support is quite clearly about the $1.20. Let me just draw it for you right here. Over the past like 2-3 weeks, you can see that we have kind of like traded lower a little bit, all right, on dips. We went to near 120, 122, 123, and buyers are starting to bargain hard and come back up right as well, right? So that is the range, I think 120 to 130, all right, a 10 cents range, about 6 to 7% upside if you try to get in near the 120. And looking at the moving averages in the longer term, so as I mentioned, for Frencken just now, when we saw it, you can see that both the red and the blue line were pretty much pointing down, all right? It's a very firm downtrend since the beginning of the year. Whereas for UMS, you can see that this red and blue line, you can see, I mean, it was like down a little bit, all right, and then kind of like flatten out, and right now you can see both of them, I would say blue is a bit flat, all right, this red line, 100 days moving average, is slightly pointing up, and it has gone back above the blue line. It's gone back above the 200 days moving average. So that's the sign of strength in terms of a reversal just starting to happen in the mid to long term trend, if we can hold above like a key support like the $1.20. 20 cents, which is what we're doing right now. So as I say, we can hold above 120, good. We might consolidate from 120 to 130. Let me just draw it for you, like straight up, down. You might just consolidate here, up, down, and eventually, of course, we do break the $1.30 level. That would be good if we break 130. I think the upside can potentially happen all the way back up to maybe that 140. All right, 140 would become like the next resistance level we can expect, because it was pretty much the resistance here. You can see right over here became the support. Yeah, we broke down, went all the way down. So I think that would be the upside after $1.30. But right now, I think the range is still from 120 to 130, but it is looking quite good at least, all right, in terms of the trend starting to turn up. So this one might, I would say, a better Singapore tech stocks. I mentioned there are two that I like, so this is probably one of them. If you can hold above 120, I think that would be a good thing in terms of more upside in 2023. Okay, let's move on to the fourth Singapore tech stock. I would say a fintech stock that recently came in the picture, and I kind of like covered it as well in my previous video. And this was one of those stocks that were asked. I would say the most popular stock that were asked in one of my most recent Facebook live show called Ask Me Any Stock. It was one of the stocks that a lot of people ask about. I think more than 50 or 60 people asked about this, and this would be IFAST, right? IFAST, which we are indeed seeing some signs of a reversal. So let me just explain to you, right? So I would say that for IFAST, since the beginning of the year, right, maybe even end of 2021, September, October, it was very strong uptrend in 2020, went up, and then you can see the trend started to turn down. We broke certain support like the $8. Moving averages started to turn down, went from like 8 to 6 to 5, 4, all right, all the way up to here, and then we saw a little bit of a bottom somewhere around at $3.50 to $4 mark right over here that I've drawn it previously, all right, and then we are starting to see some signs of the trend, all right, turning from like down to a little bit of sideways, or a little bit of sideways for now, and this is what we're saying. So we kind of like broke this $5, all right, $5 level right here. $5 would be what we call a really key psychological support turn resistance that we can see right here. $5 was that level when we broke down. We kind of like tested a few times and we went lower. We tested again, went back down, and finally right over here somewhere around like November last month, we kind of like tested it and we broke the $5, and there were some upside targets that were drawn actually from $5 maybe all the way to about the $5.50 to $6. That was pretty much our upside targets, right? So right now it seems like we have gone up a little bit and we are back to some consolidation, which is healthy actually, right? We don't want to see a stock just like reverse up very quickly, and then up, and then just sell down all the way back down. No, we want to see it moving up, all right, break a resistance and then move up while the trend indicators start to turn up. There's some signs of the uptrend slowly starting to take shape, and then it starts to consolidate. That is a healthy uptrend rather than just going up fast and then coming back down the next day, all right? So we're going to see some consolidation. So that's what's happening right now. You can see that this, after breaking $5, we push up to around that $6.30, I would say $6.20 to $6.50, and then we saw a little bit of profit taking. It came back down and we are kind of like consolidating. So what would be kind of like the near-term support for now? I would say that the near-term support for now would be around $5.50 to $5.80. Let me just draw it for you. I think that is the range right now, $5.50 to $5.70, $5.50 to $5.70. You can see this is also where the 20 days moving average line is as well. This is the short-term 20 days moving average, which you can see that it is still pointing up for now, right? So that's a good thing. That's a good thing in terms of the short term. I think it still looks quite good because this green line is still pointing up, and prices obviously is still above this 20 days moving average. So short-term wise, it still looks quite good. Anything above $5.50 to $5.70 even, that's where we can potentially see a bit of a rebound all the way to maybe like $6.20 to $6.50. I think that's where some selling can actually come back. So that is pretty much a consolidation, right? Just consolidate here up and down for a while. Eventually we might test that $6.50, and if we do break this like $6.50 level, then it could be a next phase up all the way to like maybe $7 to $8. That could be where the targets can be revised higher. But right now I think it looks quite good. It's one of those stocks whereby there are some signs of reversal. Previously we needed more confirmation, but right now we have broke $5. We're still staying above. In fact, support has been risen from $5 to $5.50. And look at the longer term moving averages that I talked about, right? So I talked about this, the red and the blue line in terms of the mid to long term trend. You can see that this red and blue line. So I talk about it in terms of the Facebook live show as well, in terms of the trend reversal. You can see that this is where right now the red line, 100 days moving average, is slowly sloping up right now, right? You can see slowly sloping up, right? Eventually, I think if you can hold above the $5.50 to $5.70 over the next 1-2 weeks, maybe into early of next year, this red line will slowly move up, 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 and eventually it crosses back above the blue line, which is the 200 days moving average, right? When that happens, that's a sign of the trend kind of like turning up in the mid to long term, right? Like what we saw over here, all right? This is what we saw over here when we broke down, I mean, since like February 2022, and then the trend turned down and it just went down, down, down. So right now, finally, right, this red line, which is all the way down, down, down below the blue line, is slowly starting to slope up, slowly starting to come back above the 200 days moving average. When that happens, I think that's a good thing that can lead to more confirmation of the uptrend starting to form up more closely in 2023. Alright guys, so these are pretty much the 4 top, I'd say most popular Singapore tech stocks for now: AEM, Frencken, UMS, and IFAST. So these are the 4 stocks that I covered. I hope you have taken note of the key levels. And as I mentioned, I like 2 of them for now. I would say that if they hold above their key support levels, that would be like UMS, the 120 level. I think its support has been holding quite well. If you can hold above that, it still looks quite okay. Even for IFAST, above 550 to 570, it still looks quite okay. The trend is slowly starting to build up. Alright, we need to give it a bit more time to play out, but it looks quite good in terms of a reversal into 2023 as well. Frencken is still a little bit down, a bit of downtrend, not for now. I think that's where we want to break that certain key level that I talked about, the 120 level. Alright, for AEM, as I mentioned, the 390 to $4, that is a level, unfortunately, we're still seeing selling there. But if you get above the $4 level, then we might look at it again. Then I would say more upside can happen, I would say, going into 2023. Alright, so thank you so much guys for watching this video. I hope you like this video, and if you do like this video guys, go ahead to give me a thumbs up. Alright, hit the subscribe button, that will really help out the channel, and thank you so much for doing this. So wishing all of you a happy new year, Merry Christmas. Thank you so much for watching this video. I look forward to see you in the next video. Take care.